Hi everyone. Today let's take a look at my longer term holdings. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So looking at my longer term holdings here with M1 Finance, this is a dividend growth portfolio. I don't talk about it a ton because it pretty much does its thing. I add money to it occasionally on these kind of selling dip lows here. I'll buy some stock and then kind of add to it. But on a regular basis, I really don't add too much money to this. You can see it's made around $2,500 in dividends, around $4,600 here, almost $4,700 in market gains. Most of this is in real estate. That's the largest holding at 19%. This is one of the bigger holdings here. And then I do have some dividend growth as well as value ETFs. Looking at the real estate a little bit closer here, Simon Property Group, Realty Income. Those are the two largest holdings. And then I do hold some real estate ETFs and then a couple of others that I've kind of picked out here. Vici Properties, WP Carey, Federal Realty Investment Corp, as well as Welltower and Stag. So just a couple of individual companies. I kind of picked these a long time ago, so honestly I don't remember exactly why I picked them, but they're dividend payers on a monthly basis typically. And then you can see bond portfolio here. Everything you would expect, just those medium-term bonds, things that pay out large dividends, mostly intermediate, Vanguard Intermediate, S-Tips, probably need to sell that here now. It was a really good purchase at the time. Obviously, it's done quite well for the amount of money that I put into it, but mostly intermediate bonds, Total Bond Fund. Vanguard True Value, those are your big blue chip stocks. That's also done quite well. I bought it a long time ago, mostly during the COVID lows, so definitely a long time ago. That's why it's done so well since then. I added some JEPI here, so JEPI, which is your S&Ps, JEPIQ, your NASDAQs. Those have done well. Both of those have rallied pretty decently, and of course they pay really high dividends every single month. So again, that's why it fits well with this portfolio. You get a little bit of growth potential, but also those monthly dividends. High dividend yield ETF, a little bit of international dividend payers here. Those have done well. I bought those at some really low levels. And then some bank balance sheet, just some mortgage-backed securities, a little bit more medium term, some muni bonds in there as well. Again, just trying to get those dividends across a couple of different things. And then there are a few individual stocks in here, not a whole lot. Costco's the biggest holding. It's obviously done incredibly well, but these are all very small holdings. Peloton obviously did terrible, but it's only $40, so not a huge impact. Nothing crazy though. Most of the money obviously is in these big dividend payers, specifically real estate and those monthly dividend payers. And then looking over at my retirement account here, you can see I am actually following the 60/40 portfolio right now. I was much heavier in stocks, but I actually sold some of them and moved that money over to bonds. When they say cash here, they mean government bonds. That's really what this G fund is. So short-term securities, returns around 3.2%. F fund, this is a total bond fund, 4.7%, 4.8% in there. But you can see I am currently buying bonds, maintaining this 60/40 portfolio. And then the 60 side is 35% S&Ps and then 25%. This is a little bit different here. Mostly mid caps, total stock market fund, basically stocks that are not really in the C fund but are also still worth investing in. Still does okay, around 11%. S&Ps, however, obviously doing the best out of the group, but I do like bonds and they've done quite well over the last couple of weeks, and that's really been, and I think it's a good way to balance out your portfolio. And then one of my other accounts here is actually Ground Floor Investing. This company loans money to people that are flipping houses, and you can get somewhere between 9 and 11% on these loans. They do return pretty well. You can see my actual rate of return is around 8.9%, which is pretty solid. This is kind of like a tertiary savings account for me. Just about $11,000 in terms of value. Not everything is invested right now because they don't have funds all the time, and I don't want to get overly invested in each individual house. I try to spread the money across, but almost all of the money is currently invested, and like I said, actual rate of returns around 9%, so it's a pretty good return. And most of these loans are less than a year, just a couple of months. Some of them return quite quickly, and you can see net earnings here around $2,000. At 9%, it's about $900 a year, which is not terrible. It's about a new phone every year just on lending this money out and giving you some incentive to not just spend everything. It's a pretty good return and relatively safe because if the investor does default on the home, then Ground Floor has first rights to that home, and then they typically sell it in a foreclosure, and they can get around 70-75% of your money back, which is usually pretty good. Let me know down in the comment section what you think of these investing holdings. How do they compare to your holdings? Are you heavier in stocks, or are you looking for more bonds at this point? or just dividends? Let me know, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.